As fear continues to increase across traditional markets, Bitcoin takes a dip today, October 28th. What is next for Bitcoin? Is there any support in the short term? What's up, everyone? Welcome to Crypto Capital Venture. Thanks for cruising by. Hit that subscribe on the way in. Let's jump into this video, everybody. Look at this. This is the volatility S&P 500 index, also known as the fear index. We talked about it in yesterday's video, and it's up. It is continuing to rise going into these elections. I truly think that's a really big part of what's going on. I don't think the riots in Philadelphia are helping at all, but there's a lot of unknown. And we talked about this in yesterday's video. Just in the last few days alone, this index has increased 30+%. So it's no question why traditional markets are down and Bitcoin is down. But from a technical perspective, there's also confluence with that on the Bitcoin chart. So let's look at all of this, because none of this is unexpected or surprising. I tweeted this yesterday. At this point on the Bitcoin chart, I'd get ready for a negative 10% or more dip for a period of short-term consolidation. 12,200 is a nice area. I'm going to discuss that in a second. If this does not happen, Bitcoin has gone full bull. So when I tweeted that was yesterday around $13,626, and we've retraced since then. We're getting a little bit of a dip. So let's cover what's going on here. So we talked about this the other day, this rising wedge, this rising channel of sorts. If Bitcoin, oftentimes, which it does, was going to continue to the upside. And it did, right? And we actually hit a pretty good target, breakout target, in regards to this rising channel. And we pretty much immediately, right around the $13,800 range, saw resistance. We've cruised back down, currently testing really the upper trend line of that channel. There is actually on these short-term charts still room maybe for one more leg up for Bitcoin, potentially to test that $14,000 area. And I think at that point, Bitcoin may stall out. I don't think we're in an environment on these Bitcoin charts where Bitcoin is going to do what many want it to do, myself included, which is essentially just really keep going up with not too much consolidation and test that $16,000 area. We know on the Bitcoin charts that $16,000 area is such a key area for the bull market to really begin. 13,000 to 16,000, we've been calling it the bull market doors on this channel for many reasons, but I don't think Bitcoin's in an environment where it's going to be breaking up to that area just yet. We need a little bit of patience, but let's look at what's going on these charts. So on this daily chart, and this is one big reason why I tweeted this yesterday. If you look at the daily chart, Bitcoin from the 50 moving average was overextended 20+%. If you've been watching this channel for a while now, we talk about this all the time. Overextension from the 50 moving average is just such a key indicator to watch for Bitcoin. It is so consistent. And we can take this back here, 20+% back here, overextended. It's time to start looking for Bitcoin to get ready to stall out, which it did. We had one more leg up, and we still might have one more leg up, but it's time to get ready to see Bitcoin consolidate. At the very least, trade sideways. Historically, everyone, on this daily chart, this overextension from the 50 moving average is so key. When it happens, this overextension, Bitcoin oftentimes pulls back. So that's Bitcoin in terms of the 50 moving average, but there's some other things going on that I really want to talk about on this daily chart. You see this green rectangle right here. That is a very important area in terms of this Bitcoin dip. And if you remember, we were tracking this Fibonacci retracement area, which was the swing high in August to our September swing low. And this is part of my prediction video I did in September. I don't know if you remember, but Bitcoin was somewhere around here. I talked about Bitcoin's going to revisit this area of resistance. That was my prediction. I didn't know if Bitcoin would break it, but it was a very key tell for Bitcoin, midterm, even long-term, if Bitcoin would break up, and it did. And because it did, I'm still very bullish on Bitcoin long-term and midterm. But now that we've broken this area, this is a time where we use this data point as support. Right now, we're looking at around 11,200 to 11,900. So keep that in mind for Bitcoin. Now, if we go over to this 6-hour chart, what I want to show you is this. And there's that support area we just talked about. And on this 6-hour chart, we want to place one more Fibonacci retracement. And that will be from the swing low before Bitcoin kind of took off into this move, and this was mid-October, it was a couple weeks ago, that swing low to the current swing high, and we have a Fibonacci pullback support area. Now you can see where the support area lies, pretty confluent with this Fibonacci resistance that we just talked about that Bitcoin has broken through. So we have this area that Bitcoin recently broke through that we just discussed, and now we have this confluent area right around 12,200 where the 618 is to the $11,800 area, and we have these two key Fibonacci retracements that essentially are very confluent with each other. There's harmonious support lying within the Bitcoin charts right here. And in terms of a dip, at the very least, which I tweeted yesterday, we might have another 8% or so to the downside to really test that 12,200. But at the end of the day, this can go all the way down to the $11,500 area in the short term, right? So from where Bitcoin is right now, we could be looking at another dip of 10 to 15%. Altcoins could really kind of get demolished in the short term. It's something to be prepared for. If I do go to the weekly chart, I do just want to note to you on the macro, right? We've been looking at the micro, zoomed in on the charts, but on the macro charts, we always want to keep an eye on this 20-week moving average, currently sitting around 10,800. It's getting pulled up, right? This is getting pulled up, but it's slowly but surely moving up. But right now, sitting at around $10,800 area, a very key area for Bitcoin, especially post-halving. If we go back to 2016 post-halving, we see Bitcoin kind of, it tested that over and over, right? That green line. It tested that support area over and over, even on the way up. So you can anticipate something very similar for Bitcoin. And in those moves, there was much volatility and I'm sure much fear for Bitcoin. Interestingly enough, if you look at these Bitcoin charts, we're at a very similar area post-2020 halving as we were back here in post-2016 halving. So, to the downside, I know it sounds crazy, and this is really the basis of what we talk about a lot on this channel, these huge dips back down to that 10,800, 17% back down. And from, this previous wick up, it's a plus 20% dip. It's a big dip. But it's what you want to be prepared for, everybody, because it's just historically what Bitcoin has always done. If we look at the daily chart, this is just another reason besides the daily overextension on that 50 moving average. We were up here in this overbought territory on the RSI. Historically, this really always leads to some type of consolidation, if not a decent dip, then just sideways consolidation, but oftentimes a decent dip, right? And this is zoomed out on the daily, going all the way back. Here's the 2016 halving all the way back here. Look at this data. Every time Bitcoin's in this territory, there's some big dips, and you can see them on the charts. I know we're zoomed out, but these are huge dips for Bitcoin. Look at this huge dip. And this is all going up into the bull market high. This happens. So everyone, we're going to keep doing this on this channel. When we're overbought in the daily chart, we're overextended from the 50 moving average, it's just almost guaranteed that Bitcoin's going to dip. So this is 100% normal, everything that's happening on these Bitcoin charts. I wouldn't have too much fear. What I would have, though, is some healthy anticipation that this might draw out. There might be even some capitulation leading into the next week or two. There's so much going on, and I don't know how traditional markets are going to react. But when there's a lot of fear, things could get crazy. But at the same time, there's a lot going on for Bitcoin, and I think there's a lot of big buyers out there. So any dip, significant dip, 5%, 10%, might get bought up to many people's surprise. So this is what we're looking at on the daily chart. Long story short, I think this is extremely normal, even historically from a technical analysis perspective, but it's just, we have to be prepared for these dips, for these things. And so we are, but I definitely see continued consolidation somewhere, hopefully above this key area that we just talked about in this video. maybe a symmetrical triangle of sorts, maybe a falling wedge of sorts, something like that. We should see some consolidation, and then hopefully after the elections, things settle down, we can continue up to really test those bull market doors. Hit that subscribe if you're not a subscriber. Hit the like button. Everyone, I appreciate you. I'll see you in the next video. God bless.